Hey everybody, good day. This is Ben and Boz, and this is the first installment in our video series trying to explain financial accounting. I'm Boz.
I'm Ben.
And we've been thinking about this one for a long time. We're excited to finally roll this out. What we're really doing here is we have a series of 12 lessons. They're each maybe going to be about 20 minutes long, where we're just going to try to go through accounting in about 20-minute intervals. So it's not meant to replace a textbook or cover everything that you're going to see in there, but just try to hit some of the core principles. Is that consistent with what you're thinking about these, man?
Absolutely. We just want to give you high level and really conceptual information, hopefully build that conceptual framework so then you can apply it to any situation you might run into.
All right. Well,
let's get into it.
Let's do it. So this one is called the basics, and within the basics, what we're going to be dealing with here is, well, let's just start it off with an example. So let's say we've got a friend who has his own business selling T-shirts to college students, and on the surface, your friend's business seems quite profitable, as he can buy the shirts for $5 a piece and then sell them for $15 a piece. What other costs may he have? What do you think, Ben?
Yeah, this seems pretty typical. A friend tells you about something and it almost seems too good to be true right away. There's got to be more costs there. Maybe he's got to do some shipping when he sells the shirts. He's got to pay taxes on that profit for sure. Storage, perhaps. Advertising. What do you think?
I think those are the costs, and I guess we had them listed right
Oh,
there.
look at that.
Good job, Ben.
It's almost like I cheated for that one, boss.
Pretty much, that's right. All right, well, so there's just additional costs, right? It's not just purely saying we're making 15 minus 5 or $10 on each shirt. There's a lot of other things to consider. Now, the next question would be, to help offset these additional costs, he's asked that if you want to invest in his business, what sort of questions might you ask of him?
Well, I would really want to get into, does he know what he's doing? What's his plan? What's he going to do going forward? Has he really been profitable in the past, or is there some other things that I should know?
Yep. So how's he doing? Prior expected cash inflows, outflows, things of that nature. So let's say your friend comes and provides you with a printout showing his sales and his expenses for the past year. What additional questions would you have? I don't know, Ben, if I just gave you a printout and said, invest in my business, here's proof that I'm making money, what would you think about that?
I'd actually want to know where your printout came from.
Yeah.
How'd you get the information
I
for
could just be
that
making
printout?
it up,
You
right?
could just be making it up, honestly. And did you follow any sort of set standards, anything that maybe could I reperform it and get the same results that you did? Those are some of the things that I would want to look at.
Yeah, totally. So you can see what we jotted down there. More prior years, year-to-date information, future expectations, proof that what we're showing is real. And then kind of a final thing, what else might you want to know? So let's say that you're investing in this friend's business, and he gives you all the good financial information that, that's real and that you can see more stuff that you want. So maybe that seems like a decent investment, but that still doesn't mean that you want to invest in that one. Where else might you go with it?
I mean, before I make an investment, I want to know what are my options, and I want to be able to choose the best available option for me. So maybe I have another friend that's also selling, maybe not T-shirts, but tacos or something like that.
Yep.
And maybe his business is more profitable. I'd rather invest in that.
Sure. So are you might even, how risky is it? What kind of returns can you get? What would be other investments we could do? Or, you might be able to invest in, a company like Apple instead of investing with your friend. That might be a better deal for you. So that was just an example to kind of set a tone for, why there's a need for accounting information. So an overview of what we're going to try to go through. When we say financial accounting, what do we mean? What are the 4 type of financial statements out there? You're going to learn about these things called financial statements. Understanding kind of the how and the why behind financial statements, about the preparation of those. And the 4th one, the concept of corporate governance, which is kind of a mouthful right now, but you'll learn about it in a little bit. So when we talk about the term financial accounting, we can think about it in a set of established rules used to prepare financial statements for external users.
So there's a few keys here then. Established rules, right? We'll figure out what are the rules and where do those come from. What are the financial statements? We'll learn about that in this video. And then also, who are those external users?
Yep, exactly. So accounting, the language of business, that we hear that a lot. It's, do you have a favorite foreign language? Were you German? I thought you were German.
German's my favorite foreign language, for sure.
I don't know much German, but like, sprechen Sie Deutsch, right? That means...
That's German. Do you speak German?
Yeah, just like, I prefer Spanish. Hablas Español. those mean, do you speak that language?
Do you speak Spanish?
Yeah, that is.
How do you say, do you speak accounting?
Hablas contabilidad?
Sure, sounds right to me.
That's right. But what it is it's just like what Ben and I were doing right there is, how you say, do you speak German? Do you speak Spanish? When we're going to be using terms like common stock, accumulated depreciation, deferred revenues, that's just kind of a language that's used to explain accounting principles. And then we're going to use accounting to measure results of a business and then communicate it to the owners. Financial statements, there's 4 big ones that we're going to go through in just a moment here, but they're reports that are going to summarize financial information of a business. We got to use established rules in order to do that, and the rules are called GAAP, Generally Accepted Accounting Principles. And then the external users who are usually going to use financial accounting information are going to be shareholders and creditors. And just kind of a big thing is this is not the only type of accounting out there. There's lots of different types of accounting, managerial accounting, tax accounting, but this is financial accounting.
Yes, and this is GAAP too. They're all different standards. Like there's international financial reporting standards as well. So sure. We're going to be focusing on GAAP in these lessons here.
Yeah, so shareholders and creditors, those are the 2 main people who use financial accounting information. Shareholders are the ones who are going to provide usually cash to a business in exchange for owning part of the business.
So an example of this is, say, Snapchat just recently had their IPO, and if you wanted to earn shares of Snapchat, you could go ahead and pay them. I think it was like $20 a share. The business would receive that money, and you would receive shares of ownership.
Yeah, you would actually own some of that. But it can be individuals or groups. So individuals invested in Snapchats. Snapchat as did groups as well. And then, why would you do that? Well, you want something called dividends, which is kind of a cash return on your investment. And then you also want your investment to go up. So if you invested into Snapchat at $20 a share and you're going to sell it in the future, you want it to be something higher than $20 a share.
You're not doing so well now, Boz. It's down below 15 right now.
Is that what it is? So I didn't even know that. So, but
they don't always appreciate. But ideally, you'd be able to analyze the financial statements and have a pretty good guess as far as if it's going to be more valuable in the future.
Totally. But so the other group of people is creditors. They're different in that they give cash to the business, but in exchange for more of a promise of repayment. And these are like banks. When you go to get a loan from the bank does not take an ownership in you or your business, but they want repayment. And they want not only repayment of their principal, the amount they loan to you, but also interest on that as well.
Let's get into some of these financial statements.
Sounds good, man. So in my mind, there's 2 big ones, and the balance sheet is the first one. This is a balance sheet for Home Depot, and what the balance sheet of Home Depot does is it measures the financial condition of a company at a point in time. And the key equation, assets equal liability plus shareholders' equity. If we just look off to the right of this balance sheet, Home Depot has a year that ends. It's not a calendar year. They use a year end in January, and their total assets are about $44. This is $1 billion. It says that these financial statements are in millions. Their total liabilities are about $43 billion. Their total equity is about $1.5 billion. But their total assets of $44.5 billion equal their total liabilities and equity of $44.5 billion.
And if you stick with us, you'll see in Lesson 2, we're going to go through the balance sheet in a little bit more detail, kind of learn some of the ins and outs and how they actually record these items.
Absolutely.
Just a little plug for Lesson 2.
That's right. This is meant just to be a momentary snapshot here. So the income statement, there it is for Home Depot, and it shows the prior 3 years. And again, it's in millions of dollars. So Home Depot sells about $100 billion worth of stuff. And after deducting their expenses, they made about $8.6 billion. So that's just kind of a snapshot, and it looks like they are growing over time. Home Depot, what the income statement does is it measures revenues and expenses over a period of time. The key equation, revenues minus expenses equals net income.
Yeah, and if you look over on that income statement for the Home Depot, you see the first line is revenue, and everything else outside of some of the subtotals are just various expenses that they have to report because investors and the bank want to know where are they spending their money.
Totally. That's more of a chapter 3 type of thing. They're going to have for lesson 3, they're going to have to stick around through lesson 3 to learn more about the income statement.
Looking forward to it.
Yeah,
already.
Totally. We're giving plugs. Statement of stockholders' equity, and this is an example of one for Home Depot. Measures changes in equity over a period of time. It's got common stock and retained earnings. Sometimes common stock called paid-in capital here, or excuse me, here's the common stock and here's the retained earnings. And the key equation is you're going to have the beginning balance, and you can see that balance at the beginning. And the common increases are going to be profits and stock issuances. The common decreases are losses, dividend payments, share repurchases. And so you start with the beginning, you adjust for those items right there, and you're going to end up with your ending amount.
Yeah, you can see this one does get a little bit more complicated than the balance sheet or the income statement. And in this first accounting course, we're not going to spend too much time on it. Doesn't mean it's not an important statement, but it's just one that we don't spend as much time on.
Yeah, and these amounts feed into the balance sheet, so we're going to work with them as we go through the balance sheet. One of the final lessons, it's going to be a lesson 11 out of 12 that we're doing. It's a 12-lesson series we got going here, but lesson 11 is the statement of cash flows in more detail. Here it is, very summarized, but this is Home Depot. We can see if we go to the very bottom here that Home Depot has $3.6 billion of cash at the end of the year. They had $2.5 billion of cash at the beginning of the year. So what this statement does is explain how did they go up by $1 billion in cash? What were the big changes? So it's going to summarize cash flows going in and out of the business over a period of time, cash at the beginning, and then we're going to adjust it for cash flows from operating activities, investing activities, and financing activities to get cash at the end of the year.
Yeah, and so operating is kind of just their day-to-day. When you walk into a Home Depot and you buy something from them, that cash inflow would go into the operating section. Investing is getting into maybe they're building new stores or things like that, investing in that, their own business. That falls under the investing activities. And then financing is kind of how do they pay for it. That could be earning new debt or paying down old debt, things like that.
Yep, totally. And huge, important statement. We don't get, again, there's a chapter or a lesson going to be dedicated to it a little bit later on. So we move into the preparation of financial statements, and kind of a key here is to know that most businesses don't use financial accounting. Most businesses out there are private and are not required to prepare financial statements. Ben owns a beekeeping business. I do some speaking. I've published a book. We're private. We don't have to prepare financial statements at all.
Do you prepare financial statements?
Not under financial accounting, but just a brief summary needed to do my tax return, basically, right?
And that's pretty common too.
Yeah, is all I do. But what happens is when a business becomes publicly traded, then you have to prepare financial statements. So Ben just mentioned Snapchat, but publicly traded companies, those are most of the big ones that you're thinking out there. So, I mean, this is your Apple, your Facebook, your Amazon, your Google, your Microsoft. Those are 5 of the biggest in the whole world. But some big companies are not publicly traded. And we're here in Minnesota. Cargill is one of the biggest companies in the world. They're not publicly traded. If we have any listeners tuning in from down south, Love's Truck Stops as an example. They are not a publicly traded company. But a lot of big businesses are. To be publicly traded basically means that you've gone through a very rigorous registration process and to allow your shares to be freely traded by investors.
And so usually when you buy a share of stock, say if you went out to the market right now and bought a share of Snapchat, you're not giving Snapchat your money and they're giving you a new share. You're probably buying it from someone else who owned the share and now wants to sell it. Only when businesses do their initial public offering do you buy shares directly from them and give the business your cash, but usually you're just going to be trading with other investors.
Exactly. But some private companies do issue financial statements. Sometimes banks require them to, or they just think it's a good practice to as well. So I mean, we talked about Cargill or Love's Truck Stops. I could almost guarantee that they've got financial statements. They totally have financial statements, but they don't technically have to follow the financial accounting rules unless there's some specific requirement to do so.
And so there are a ton of different regulations and rules required if you're going to issue statements publicly. And so why is that?
Well, started back in October of 1929. Kind of the stock market crash triggered the Great Depression. The stock market actually lost about 25% of its value over a 4-day period. Again, triggered the Great Depression, destroyed investor confidence in public companies. And then as a result of that, Congress passed the Security and Exchange Acts of 1933 and 1934, and that created, those acts did the Security and Exchange Commission.
So what does this commission actually do?
Well, we got a little picture here for you. So
it's a nice picture.
Yeah. The Securities and Exchange Commission, we call them the SEC. So the SEC regulates public companies. So it kind of governs them, and it's just meant to increase investor confidence. But the SEC is some government regulators. They delegated their authority down to the FASB, the Financial Accounting Standards Board, and the FASB created GAAP. We mentioned those earlier. GAAP are basically the accounting rules. Stands for Generally Accepted Accounting Principles, and then financial accounting is the method that follows GAAP. All right. Now we go on to the SEC reports. There's a lot of different SEC reports that are required. Probably the two biggest in this course that we're going to get at are the 10K and the 10Q. The 10K is an annual report, and it has to be prepared within 60 to 90 days after the end of each year, depending upon the size of the company.
And so those Home Depot numbers that we were looking at earlier, that was part of their 10K, which was their annual report. Balance sheet doesn't make as big of a deal because that's as of one specific day. The income statement is where it's a bigger deal, where that income statement then on the 10K looks at all of the money that they made in the last year.
Exactly. And then the other ones, the 10K is a big one. The annual report, we'll go through a lot of references to that throughout these 12 lessons. Then the 10Q is a quarterly report. So if you are a public company, every year you have to publish a 10K, and you have to, every quarter publish a 10Q. It reports both the financial statements and then also additional information about the business. And you get in big trouble if you don't. So and we'll talk about some of that trouble coming up. When we use the term corporate governance, we kind of ask the question, well, stockholders. So Ben said, you could have got in with Snapchat. If you would have given Snapchat $20, you could have a share of ownership of Snapchat, be an owner of the company. So how do you make decisions for the company? Well, what the stockholders do is they elect a board of directors. And we're going to show you a picture of Home Depot's board of directors in a bit, but oftentimes 10 to 15 people who are in charge of making executive decisions for the company. One of the biggest decisions they make is they appoint the key executives, including the CEO, who's the top executive, and then the CFO, the Chief Financial Officer, who's another one of the very top executives. And then the CEO and CFO are going to appoint other executives and managers. CEO and CFO, they're also responsible for the financial statements.
Yeah, and actually I want to add a couple of things on this slide here. So if you're looking for a visual, kind of think of it as like an upside-down pyramid, where there's going to be a lot of stockholders of most corporations, and so they're going to be the biggest level. They're going to pick the board, and then the board picks CEO, CFO to run the company. And in that last bullet point where we said CEO and CFO are responsible, there were some accounting scandals in the early 2000s, and as a result of that, there was some new regulation called Sarbanes-Oxley, and in that regulation, they provided for criminal penalties for CEOs and CFOs if the financial statements are found to be misleading and they were negligent in doing their duties to put them together.
Yeah, you can get fined up to $5 million and spend 20 years in prison for preparing false financial statements as a CEO and CFO. We've talked about leaders, and Home Depot is just an example here. Here's their board of directors off to the right, and usually the CEO is going to be on the board of directors, and then pretty much everyone else for a public company is not going to work for that company. It's going to be executives at other companies or other retired executives out there.
Yeah, so if you were to look on Home Depot's website, you could get bios for each of these members of the board of directors, and just reading through them, they're quite impressive business careers.
Yep, absolutely. And then just also from their website, here's more information on their CEO, named Craig Meniar, however you pronounce that, and then their CFO, Carol, I don't know if that's Tome. It's got an accent over her last initial, so Tome, I don't know. But
they don't have those in German, Buzz.
They don't have accents.
They have umlauts, not accents like that.
I don't even know what that is, but that's just an example. These are the people that if you own a share of Home Depot, you entrust the board of directors and these chief executives to make good decisions, so your share price hopefully increases.
And even though shareholders pick the board picks the executives, you still don't really know that the numbers produced by the company, the financial statements, are actually correct. So what do we do about that, Boz?
Yeah, it could be the company could have an incentive to provide misleading financial statements so that investors like that company. So what happens is the board of directors appoints a subcommittee called the Audit Committee. And the Audit Committee appoints an independent CPA firm to audit the company's financial statements for accuracy. A CPA firm, they're a group of individuals who have earned CPA certificates.
Are you a CPA, boss?
I'm a CPA.
I am too.
You are too. And they work together, and oftentimes big firms, they don't have to, but they oftentimes do. And there's called the Big Four in the world. And alphabetically, it's Deloitte, EY, KPMG, and PwC. Before I became a prof, I was at Deloitte.
And before I became a prof, I was at KPMG.
Yeah. And Home Depot, they pick an auditor, and they have selected KPMG.
I did not work on that job.
No, if you were in the Atlanta office, you might have, though. I'm sure
it's probably a pretty big job.
Yeah, they're probably one of the biggest clients in the Atlanta office. The government, they've also created something called the PCAOB, the Public Company Accounting Oversight Board, which is just there to help oversee the audit of public companies.
And if we backtrack just a hair, I looked it up this morning, and Home Depot last year paid KPMG about $6 million for all the work that they did.
I was going to guess 5 to 10. So,
yeah, $6 million is about $5 million for the audit, and then about $500,000 for the tax, and then something they call audit fees.
Yeah. So, well, and for a $100 billion company, $6 million is actually not a lot of audit fees. Because Home Depot, when you think about it, that's a fairly simple company. I mean, in relative speak for a $100 billion company, but it's retail, right? And it's mainly in the United States. So, not a ton of international operations. Not a ton of financing, not a ton of manufacturing as well. So you get if you had a $100 billion company that was a multinational manufacturer or a gas and oil company or something, you're gonna have a lot more in audit fees. The impact of the financial statements. So the value of public companies is set by supply and demand. So what do people think that it's worth? And that's very subjective. So it is constantly changing. So as of July 2018, Home Depot had about 1.15 billion shares outstanding, and they were worth about $202 each. So the total value of Home Depot was estimated at about $230 billion.
That's called the market cap.
The market cap, yeah. Whereas the most valuable company in the world is Apple, and as of July 2018, Apple had nearly 5 billion shares of stock outstanding at a value of $190 a share. Apple is worth nearly $1 trillion, but
just massive.
More money than I have.
But those amounts are pretty fluid, aren't they, boss?
Yeah, I mean, they change basically every second during the workday. So because people are constantly looking at this $202 that Home Depot is worth, or the Apple $190, and they're constantly, changing that amount based on how much they think it's worth. So the impact of the financial statements, so the shareholders or stockholders, they don't often know how the company is performing on a day-to-day basis. So the company needs to issue financial statements, and they do that via a press release, and that can often happen a little bit before they issue those 10Ks and 10Qs. So it's just if you go out to a company's website, they publish how much money they made, as an example, and they tip off the press on that so the press can report it, and then the shareholders react. Higher than expected net earnings means the share price is going to go up. Lower than expected net earnings means the share price is going to go down. In May, Home Depot released earnings, and earnings were good, but their sales were lower than expected, so their share price decreased a bit. There was big news here recently that Facebook released earnings, and I think it was their new subscribers was down, and their share price declined by 20%, and Zuckerberg, his net worth went down almost like instantly, over $15 billion.
Just on one day, releasing earnings.
Yeah. He's still doing all right. He's still got a 50 or 60.
I don't feel too bad for him, but it's just interesting.
Yeah, totally. So that's just kind of a little overview for you today. It's our first lesson. We're going to dig into more details in the future ones and how these things get prepared and how we interpret them. So we just want you to remember, financial accounting. It's a method for accounting of a business's results, and we're going to be using special accounting rules called GAAP. There's 4 big financial statements out there: income statement, balance sheet, a statement of stockholders' equity, and the cash flow statement. We talked a little bit about how the financial statements are going to impact stock prices, and then this is governed by the SEC and FASB using the accounting rules, the generally accepted accounting principles. That gets us through the end of Lesson 1. Appreciate you tuning in.
Thanks for tuning in, everyone. Hopefully you join us for Lesson 2.